Trevor, I don't know whether you look at Turkey as a standalone case or whether you also look at it as basically dollar strength hurting some of the emerging markets that have so much debt denominated in dollars.
A bit of both, really, and obviously the sort of appointment of sons-in-law have become quite a big thing, with the Trump administration doing the same thing with Jared Kushner. Doesn't send a very good signal. Mehmet Şimşek was a very well-respected person in the markets. I actually worked with him at Merrill Lynch, very solid economist. So he's out and the son-in-law is in. But I think there's a more general issue for emerging markets is that the world economy is going through a bit of a soggy patch. So Chinese growth is decelerating, growth in Europe has slowed down a bit, but interest rates are still going up, and the dollar in particular has been strengthening the last few months. That combination of a slowing China and a strong dollar is bad for emerging markets across the board. Until we see those trends change, and we may well do going into 2019, I think emerging markets will remain under a bit of a cloud.
But 2019 will be we're closer to a recession, right? As kind of time continues, just because of the cycles. Is that just a fair assumption?
Well, yeah, you're always getting closer to the next recession by definition. But if you look at the U.S. economy, I think it's got a lot of legs to it still. If you look at the interest rate sensitive bits of the U.S., like housing, are still very strong. The senior loan officer surveys for bank lending show a lot of willingness to lend. The rest of the world has been slowing down, but it's starting to ease policy at the margin. So the Chinese currency weakness, the RRR cut. You're also starting to see economic data in Europe surprise positively. So I think you could get a bit of a re-acceleration next year. And that would benefit emerging markets, particularly if the dollar were weakening because of a rest of world catch-up. This is all kind of hearsay at the moment. There's very little evidence for this, but I wouldn't be surprised if emerging markets do get a reprieve, and I'd be looking to buy them on dips.
Or is Turkey a little bit different?
There's a lot of idiosyncratic risk, people call it, around individual countries. I tend to buy emerging markets as a whole, or underweight them as a whole, so I don't get into the individual country selection. But I do think that there'll be opportunities to buy as the summer progresses. But I'm underweight at the moment. You know, I'm overweight America, underweight emerging markets, pretty neutral on equities, waiting to see what happens next.
All right, Trevor, thanks so much. Trevor Greetham there from Royal London Asset Management.